Artificial intelligence is changing the world, and financial markets are not an exception. AI advisors, algorithms, predictions, risk calculations, news analysis, and everything that you can think about financial markets, they are improving more and more by the help of artificial intelligence. In this video, I want to introduce an advanced indicator on TradingView that is built based on machine learning algorithm. To add this amazing indicator to our chart, here we click on indicators and we search machine learning multiple logistic regression, this one, which is written by someone named Van He Wan Singh. Alright, this is the indicator, and as you can see, it's overlaid on the price chart. As I said, this indicator is built based on machine learning algorithm. Machine learning is a branch of artificial intelligence and computer science that focuses on the use of data and algorithms to imitate the way that humans learn and gradually improving its accuracy. This indicator uses logistic regression to generate buy-sell signals, and it uses RSI, CCI, DMI, a rune indicator, exponential moving average, and super trend as input variables for logistic regression model. Logistic regression is a statistical model that, based on prior observation of a data set, it predicts a binary outcome such as yes or no, success or failure, right or wrong. So it can also classify market movement into long or short, or in other words, buy or sell, and give us predictions on these two outcomes. I don't get into more details regarding the formula and calculations behind this indicator. You can check the page of this indicator on TradingView. The author has explained all the details, and the code is also available there, so you can more investigate if you know Python scripting. Alright, let's see what we have in this indicator and how we interpret it. We have a line here, which is our logistic regression line, and as you can see, it changes color between red and green, and depending on the color changing of the line, we have these red and green triangles that are actually buy-sell signals. Green triangle buy signal and red triangle sell signal. But you shouldn't open position only based on these signals, because you can encounter many false signals and you need to filter them. You may wonder why the indicator is generating bad signals like these. The indicator is doing its job. It's trying to identify changes that is happening in the market by the help of a complex algorithm and give you the signal. So it's normal to have also false signals, because if you're a trader, so you know that not every movement in the market ends up in large advancing or declining of the price, and this is on your hand to find out which signals are the best. So make sure you watch this video until the end, because I'm going to teach you a trading strategy that you can easily filter the false signals and only take the signals that are highly profitable. Alright, as you can see, we have also values from 1 to 0 above and below the price. These labels are actually showing logistic regression values. Negative logistic regression values are below 0.5 and shown by red color and below the price, and positive logistic regression values are above 0.5 and shown above the price and in green color. We have also a table here that shows the estimated regression model separately for each of the indicators. These are the indicators that used in the calculation of this indicator as an input. Here in the settings of the indicator, these are the default settings of the indicator used in the calculation, and these are the default regression coefficient for each of the indicators, and the step learning is also set at 0.08, and this determines the step size in the weight adjustment process. You can adjust the learning rate to control the speed and also the stability of the optimization process based on your needs and your trading strategy. But for the trading strategy that I'm going to explain, all the default settings work very well for me, so I don't change anything here. Alright, the trading strategy that I want to explain is a scalping strategy, and it's suitable for 1 minute, 5 minutes, and 15 minutes time frame. Right now we are on 5 minutes time frame, and this is the price chart of euro to US dollar, but not limited on this, and you can use this trading strategy on any other asset or market, whether it's Forex, crypto, or stock market. The only requirement in terms of the asset or market is high trading volume and liquidity, both in terms of the asset and the broker or exchange that you're trading. So trading on top brokers or exchanges are recommended, and also trading on highly liquid assets. For example, in Forex market, only major pairs, especially euro to US dollar, or in crypto market, Bitcoin to USDT, because we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss, and profit. And also for scalping, it's recommended to have a raw spread account if it is possible for you. Alright, for our strategy, we also need another indicator. So here we click on indicators and we search search Andean oscillator, this one, which is an editor specs indicator and written by Alex Grover. This is a very powerful indicator that can help us with identifying trending and non-trending markets. In times that the orange line is above the green line and red line, it shows non-trending markets. It tells us that the market is in a trading range and moving flat. And when the green line is above the orange line, it shows advancing of the price. And when the red line is above the orange line, it shows declining of the price. Everything is already set on the chart, and let's see how we trade based on this accurate scalping strategy. Alright, this trading strategy is very easy and you just need to be focused on your entry, stop loss and profit. When we have a signal, we use Andean oscillator for confirmation, because by the help of Andean oscillator we can be sure with high probability that the market is trending and we are entering in that direction. When we have a sell signal here in Andean oscillator, the red line should be above the orange line, and when we have a buy signal, the green line should be above the orange line. So here for the sell signal, this is a confirmed signal, because as you can see, the red line is already above the orange line when this candle is closed. So we can enter a short position here at this point when this new candle is opened. The stop loss for this trade is placed above the previous swing high, and the profit at the level that makes risk to reward ratio equals 2. Moving on the chart, here we have a buy signal, but the green line is not above the orange line, so this signal is not confirmed. And for the sell signal here, this is also rejected, because as you can see, the orange line is above red line. Moving on the chart, we have a buy signal here, this is rejected, and for the sell signal here, this is also rejected. Please pay attention that when you decrease your risk, you also miss some good opportunities like this one. We added another layer of confirmation to filter the false signals like this, but some good trading signals like this one can also be filtered. Our goal is to decrease our risk and enter only when we have high probability of achieving the expected result. So be patient until you have a perfect setup. Moving on the chart, here we have a buy signal and it's rejected, and for the sell signal here, this is also rejected. Both of them are false signals because they didn't provide enough movement of the price for our expected target. And for this buy signal here, this is a confirmed signal, because here in Andean oscillator, the green line has already crossed above the orange line when this candle is closed. So we can enter a long position here at this point when this new candle is opened, with the stop loss below the previous swing low and the profit at a risk to reward ratio of 2. Alright, moving on the chart, here we have a choppy market, and let's see how our strategy performs here. For the sell signal here, it is not confirmed. Here we have a buy signal, this is also not confirmed. For the sell signal here, this is rejected. This buy signal here, rejected. We have a sell signal here, this is also rejected. This buy signal here is also rejected. And for the sell signal here, this is a confirmed signal, because in Andean oscillator, the red line is already above the orange line. So we can enter a short position here at this point when this new candle is opened, with the stop loss above the previous swing high and the profit at risk to reward ratio of 2. As you can see, our strategy could perfectly filter the false signals during this flat market and only confirm this one, which was a profitable signal, as you can see. But this is not always the case, and you can encounter confirmed signals like this one, this buy signal here, and you end up in loss. No trading strategy is able to give you 100% guaranteed signals. Losing trades are always part of the game, and you need to manage your risk properly. Otherwise, you will lose your trading account sooner or later. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategy that you can use. By the help of this strategy, based on your stop loss level, the size of your position is calculated in a way that you will lose only 1% of your trading account in case if the price hit your stop loss. This ordering tool in TradingView can help you to easily execute this strategy in practice. Here in the settings of the tool, you can define your account size, your risk level, which I recommend 1%, and also you give it your intended stop loss level, which this is actually what we set here, and it will calculate your position size and show it here. So based on my settings, if I open a position with this size, in case if the price turns up and hit my stop loss, I will lose only 1% of my trading account. For example, if my balance is $1,000, I will lose only $10. I have a complete guide to this risk management strategy and different tools that you can use. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.